All right, guys, back to work tonight. Busy day in the markets today, but it's about that time of day again. Time to get back to work tonight. It's Wednesday evening. It's July the 14th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a great video in store for you guys and gals tonight. Charts are all prepped in the background, as you can see. The S&P's ready. Nasdaq's ready. Gold is ready. Glad to see you are ready right along with me. Got a bunch of great trades on my radar for tomorrow. Got some ranges on the S&P and the Nasdaq. We're trading rotation. We're focused on failures and maybe some breakouts as we go into Thursday's trading session. Gold had that nice, big, strong blast higher in the early part of the day. Got a spike in range on gold, looking for a nice slingshot pendulum swing run higher here on the gold. And of course, you know me, I'll make sure we know what the flip side, what reversals and short setups off the highs look like as well. By the end of this video tonight, you'll know my favorite trades for tomorrow, so you know what to look out for. You'll also know some things to avoid to keep yourself out of trouble, whether you're trading on your own tomorrow or you're trading with us tomorrow morning at the opening bell in our trade room. Before we jump into the video tonight, though, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video newsletter every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe to our channel. And if you guys have any questions for me, don't be afraid to type those questions in. Drop those questions in the comments section for me. I'd love to answer all of those questions for you. And if you guys enjoy this video as much as I enjoy making it, do me a favor, hit that like button, that thumbs up here for me on this video. I always appreciate you guys tuning in and carving out some time every evening to get those charts right and get that mind right for tomorrow's trading session. But speaking of tomorrow, Thursday is right around the corner. Everything continues to have a very bullish tone right now. I've got the gold, of course, pulling back and trying to complete some major objectives overhead. I've got the Nasdaq, even though the Nasdaq is range bound right now, a lot of bullish clues on the Nasdaq here. I wouldn't mind buying some dips, buying some rips. Same thing on the S&P. The S&P is a little more balanced than the other markets. The S&P might make a strong run down, but I mean you've got buy setups coming off support. So there's a lot of great ways to buy this market. And again, as I mentioned earlier, we'll definitely kind of investigate some ways to get short on this just in case we do get a change in momentum. A lot of great trades on our radar for tomorrow. Before we jump into individual charts, though, let's just make sure we're all on the same page here. Now, of course, tomorrow is a Thursday. Tomorrow is, for the most part, your typical Thursday morning. We've got some big news at 8:30 Eastern Time. There's pretty much always some news at 8:30 on Thursday, and we are not going to disappoint tomorrow. Jobless claims at 8:30, Philly Fed at 8:30, Empire State and import-export prices. I don't think they could pile anything more into that 8:30 block tomorrow. So obviously, we definitely don't want to be late to the trade room tomorrow morning. 8:30 Eastern Time is on our radar for some of the biggest news of the day. We do, of course, have Jerome Powell back on the microphone again tomorrow morning. Now, remember, he, of course, testified today on Capitol Hill, right? He testified today about the Fed's policy, monetary policy, as it applies to kind of the recovery, right, of this pandemic. He defined what transitory was. He talked about what inflation meant to him. So tomorrow we've already pretty much heard what he's going to say. Usually the second day he'll usually testify once on a Wednesday and once on a Thursday. Usually by the second day we don't get such a dramatic slowdown as he's speaking. So we shouldn't see as much of a volume drop as we saw, of course, today later in the morning, right, once he started speaking. So hopefully that won't slow us down too much. And of course we got that 8:30 block of news to get us going tomorrow. So 8:30 is definitely the time you want to be at your desks because, of course, we have Jerome Powell at 9:30. I'll definitely be keeping my eyes open for any slowdown in volume. We may see a sprint from 8 o'clock till 9:15, 9:30. We may see a brief, breaks. The market going to see what he's going to say, and I would imagine you'll have a pretty good end of the morning session tomorrow, even if there is a bit of a a stalling of the price action personality around that Jerome Powell speech. Again, tomorrow's day 2, so he's probably not going to surprise anybody. Most people are probably already, they probably already know what they know from his speech today, and so I would anticipate tomorrow to be a good start to the beginning of the morning, right, like we saw today, and then also, of course, right, a good finish to the morning after we have Jerome Powell finish up his prepared text and begin the Q&A. So big news tomorrow morning. Definitely excited for Thursday's trading session. I would love to have you there trading right along with us in our trade room. I'll put the membership information you guys need. I would love to have you there. We open up every morning at 8 o'clock Eastern Time. I'll put all the info you need to get registered and join me every morning at the opening bell in the trade room. I'll put that right below this video tonight, either on the blog at Sideways Markets or the description of this YouTube video. So news is pretty straightforward. We got some big news coming on Friday as well. So we'll talk about that plan in tomorrow night's video newsletter. Back to our charts tonight, S&P, Nasdaq, and gold. Again, everything is a little bit on the bull side here. Why don't we jump into the S&P 500 first here today? And don't forget, you can always use the chapters at the bottom of this video. I organize this video in chapters, so even though this video is relatively long, you can always skip around. I would love to have you watch the entire video, obviously, but if you only want to watch the analysis on one specific market, you can find those chapters at the bottom of this video. So what's the key takeaway here on the S&P? Well, miraculously, the S&P is still kind of rotating back and forth around that one tiny range, right, that goes all the way back to pretty much the beginning of this week. And so we're pretty much a range-bound market right now on the S&P 500. There's a big magnet right in the middle there at 4370. There's definitely an overall bullishness to this range. And one, I think, pretty easy giveaway on this range, of course, is you'll notice we're making higher highs. And, of course, we're seeing lower lows until we see that one right there, right? There obviously is something that doesn't quite make sense on that, right? So that's one of the big kind of key takeaways here of this range rotation is that we have been seeing breakouts making higher highs and making lower lows until just recently here this morning. So that does lend credibility here to the bulls. The bulls, of course, again, have the overall trend into the range, and that higher low we're seeing right now certainly gives those buyers that little bit, right, of the edge that we need. Ranges are magnets, so my job right now is to find levels of support, such as expanding triangles, levels of support and resistance, right, such as prior swings, and I want to buy low and sell high, right? I want to buy low and sell high. Now, you'll notice as the market now is rotating off the low of that range, I've marked up the amount below the range. I projected that above the range. And so we're ultimately right now looking for that rotation back up around the highs of that trading range. What I really like about this chart right now is the fact that we have a strong spike up, relatively shallow pullback, and a higher high. This gives me a really nice bull channel that I can use, and that bull channel, you'll notice, also has the benefit of this rising support trend line coming off of that low. So really get a very desirable spot to get long off of this battle zone at 63.5. Even if the market was to go lower down to those lows, we definitely still have the potential to be a buyer on that. Or, as I mentioned earlier, right, if we rip higher here, there's still plenty of space to get long as the market runs back up to retest those highs. So, again, lots of great buy setups. If we do get this run up to the highs, I can absolutely sell off of the high. Or if we were to see enough momentum running lower here, in other words, if we can see the market take off the downside and actually hold the pullback here, I definitely have potential for a short side breakout as well. So there are plenty of trades on our radar for tomorrow. Hopefully, our friend Jerome Powell won't muck us up too much tomorrow morning during his testimony at 9:30 Eastern Time. So how do I buy it? How do I sell it? Boy, I'll tell you, there's a great spot here for a trap off of that low. As the market goes lower here, I would love to see a nice trap trap off of that low. Nice strong signal candle, right? Closing back above the moving average. We call those 2-try trap setups in our trade room. Really one of my favorites. We may end up seeing something like a trap off of that low overnight into what I would call a 1-2-3 breakout. 1-2-3 breakout. I can mark up that high, mark up that low, and I can drill down, right, to a faster time frame. This is a 5,000 tick chart here. I can drill down to a faster time frame and buy that first pullback, right? So trap off that low, right? Kind of a 1-2-3 move, snapping higher here, right, to make that run. Boy, oh boy, that would be a fantastic opportunity here for us. If we do go lower here, right, if the market really does take out those lows, which in all reality wouldn't be a total shocker. You can see how strong that move down was. Anytime we see that much strength in one direction, we know there's a pretty good chance they're going to retest that low. If they take out that low, though, remember, keep in mind, we are all the way, right? We're all the way down around the low of that triangle, right? There's a ton of support down here. So even if we do make that run down to those lows, I'm still going to be looking for a buy setup. It will be very bearish at that time, so I'll be using my 2-try failure setup. 1 try for the bears, 2 try for the bears. Stops will be right above that high, right at that point, and I can buy right into those stop losses. Love that 2-try failure pattern off the edges of those trading ranges. And then, of course, if the sellers, if they can actually hold a pullback, but we had that big drop late morning today, the sellers were unable to do anything as the market rolled lower. So if we do get that move down and the bears can hold that pullback and make that jump, I can then mark that low, mark that high, and of course, don't forget, I can drill down and I can sell the high of that channel. Now again, this is a 5,000 tick chart, right? I'm not going to sell this in a 5,000 tick chart. I'll drill down to a faster time frame, and I'll use some of my favorite price action entries. My favorite price action entries are going to be traps and failures off the high of that channel. Again, this is applied on a faster time frame. We don't rely on indicators, keep in mind, to trigger the entries. We use these price action setups, traps, and failures. I'm not going to go over all of those entry patterns right now, but I do provide a very deep dive into our entire strategy we use in our trade room as part of our quick start trading class. It's a great little shortcut course on our website. So if you want to kind of get up to speed with how we trade in our trade room, how I find levels of support and resistance, and then how I trigger the entries off those support and resistance levels by using price action setups, I cover all that information in our quick start course. I'll put a link up there to that free trading class in the upper right hand corner. If you're new to trading or if you're new to this channel, you definitely want to grab that quick start class to learn the basics of how we trade in our trade room. That way, the next time I say 1 strong move, 2 pull back, and 3 breakout, 1, 2, 3 breakout into a hidden channel pullback, you know exactly what I'm talking about, right? Again, we're not just simply blindly selling the top of that channel. We're drilling down, we're trapping in buyers, we're losing those stop losses fuel, and we're selling it as we go lower. Where does the market, right, if we do get that breakout, where would these bears be trying to get to? Well, I'll tell you, there's that big level at 41.75, right, 41 3/4. That would be a pretty obvious objective, right, for those bears to get to tomorrow. But again, they've got to get that breakout out of that trading range with that 1, 2, 3 breakout pattern. If we sit sideways here, one of the most challenging parts about ranges is staying out of trouble in the middle, right? If we do sit sideways and go sideways, my plan will be a little bit different. If we do end up, again, kind of sitting sideways here, right, and going sideways here, my plan will be a little bit different at that point. Not a lot different, but I won't be as aggressive as I would be before with the trap. What I would do is, in that situation, if the market goes sideways, I would wait for a pullback, wait for bears to come in and try to get short off the breakout pullback and then buy into their stop losses. That's a one kind of small, right? And again, that would be what we call a failure price action setup. We cover all the details of that stuff in the quick start class, like I mentioned earlier. So if we do go sideways, I definitely won't be as aggressive with that trap that I mentioned earlier. I'll look for that failure pattern right below that low. What if we break higher here? If we break higher, again, I can buy that rip right, going higher here, I can also look to sell it off that high. I would love, again, like I mentioned earlier, I would love to get that trap below that low and then also grab it as it's going higher here. If we, for example, let's say we bounce off that low, right? I talked about the 1, 2, 3, find that channel, right? I talked about that one earlier. Drill down. And again, you're looking at a price action entry right off of that low. Objective is back up to retest those highs and that pendulum swing. That would be a fantastic trade. We may also see it really rip. If it was to really rip higher here, one of my favorite trades right now in these summertime markets are these 2-try traps. One of my favorites, this is, of course, is a smaller version, as you can see, of this pattern right here, right? This pattern right here, strong move up, shallow pullback. That's the same basic pull, right? That's the same basic pattern. It's just a much smaller example of there up there, right? So that's going to be the, again, we can buy that rip as we're going higher here. As we get up there, don't forget, sometimes, like you see on gold here in a second, sometimes the market will rip higher and then just start going sideways up here. If we start to see if the market does race higher and go sideways, and this of course would apply in both directions, I can then look for support levels like prior swings below the range and then combine those support levels with our failure setups, right? Find those failure setups off of that low. So keep that in mind, right, as we go higher here, if it does start to drift off and go sideways. How do I sell this high? Right? Because after all, we're looking to rotate, right? How do I sell it back down again? I can easily sell it back down again, but look what happened back here, right? See what happens back here? We run up, big strong move, right? The buyers try once, the buyers try twice, and look what happens on this pullback. Draw that trend line up off that high. See it? Yeah, that's the setup. That's the setup I want to see over here too, right? Or some variation. And again, this is nothing more than that 1, 2 try failure setup that I talked about over here, right? If we go lower, bears once, bears twice, right, back up again. So if we do make it up around the highs, right? If we get up around those highs, again, top of the triangle, top of the range, pendulum swing. If we do end up back up at those highs here, now we look for exhaustion. I'm not going to sell the top, but I will definitely be open-minded to buyers once, buyers twice, right? And then, of course, stops are sitting right below those lows, and I can sell into stop losses. I can sell that trend line, right? Like I mentioned earlier, right? There's a lot of ways we can get short right off of that high. So looking to buy the rips going higher here. Again, I would love to buy the dips. Just be careful with momentum. And again, I know if you're brand new to this video right now, here for the first time right now, a lot of these setups I'm talking about are going to be foreign to you. So not to worry. Grab that quick start class in the upper right-hand corner, and I'll bring you up to speed on what we do here at School of Trade. All right, we're looking good. S&P is looking pretty good here for tomorrow. Nasdaq. Now, the Nasdaq is very similar to the S&P, but like I mentioned in the introduction, the Nasdaq has a little bit more bullish tone to it than the S&P 500. Now, you'll notice it is a range, right? There definitely is a range on this, but if I zoom out on this, you can definitely see, right? We are seeing higher highs, barely higher highs there, but they are making higher highs there. We're seeing higher lows right now. So we definitely have that bullish tone here on the NASDAQ. What is really a big clue about the NASDAQ right now is there's actually two ranges, one at the bottom, one at the top. And if you're an auction market person or a market profile theorist, I did a lot of studying of market profile. I used to try to trade with market profile when I was a younger trader. I've abandoned that. As you can see, I'm not a market profile trader. I don't think it gives you any real edge. All I think you need is this one moving average and understand market psychology. But nonetheless, though, in my younger years of studying auction market, in market profile, we would call this a double distribution, right? There's a big block of volume there, big block of volume there. And what happens on situations like these is that you get these really what is oftentimes really wild swings, right? Back and forth, because what they're trying to do is they're trying to fill in this area, right? They're trying to fill in all of that volume right there. So we basically have, again, I don't want to use too much terminology here, a double distribution type of day. We've got range down bottom, range in the middle, or range at the top, and they're trying to fill in that middle. The best trades in a situation like this are pretty good. The best trades here are you want to pick the edges. Right, you want to pick the edges. That's where the primo trades are. So as we go lower, you want to buy that low, or in this case, because there's so much bullishness to this, right, to this chart, buying the rip, right, as it goes up to those highs. So that this kind of double distribution day, these two ranges, and again the higher lows that we're seeing on the chart, just really kind of gets me excited about the Nasdaq tomorrow. Nasdaq definitely has some really great potential to be a really wide range right here tomorrow. So how do we trade it, right? What's the key here? Well, how do we buy it? How do we sell it? Again, this just like the S&P, we want to buy low, want to sell high, and we'll focus on failures. The move going higher here is going to be the easier money because, of course, right now we've got the market rotating right back and forth here. So if we can get for example, a strong run up, a shallow pullback, and a higher high, that should be easy pickings to be a buyer here on the Nasdaq, right? You can see examples of these pretty much everywhere, right? Strong move up, shallow pullback, higher high, right? Buy that trap, right? These happen all the time here. So a strong move higher, right, with a two-try trap setup would definitely be on my radar for tomorrow. What if we jumped up? What if the market pulls back and then jumps off that moving average? Now we call that a 1, 2, 3 breakout, right? 1, 2, 3 breakout. It breaks free of that range magnet. And now at that point, where do we think the buyers want to go? They probably want to complete this big channel, right? It's that big channel. Yeah, they probably want to complete that big channel up there. So, of course, we already know the market's very bullish to begin with. I can mark up that high. I can mark up that low. And again, I'm not going to take this on a 3,000 tick chart in the Nasdaq, right? I'll drill down to a faster time frame, and I'll find my price action setups to buy off that low, right? My favorite price action setups are going to be those traps off the low, right? Those traps, those failures. Failures oftentimes lead to pullbacks, and pullbacks into strength moves. Now, again, if you're here for the first time right now, a lot of that's not going to make any sense, but not to worry. I cover all those smaller details in our quick start class. There's a little button up there for you right in the upper right-hand corner. So if you grab that and get registered on our website, you're going to love that course. So we know how the market goes higher. We know how to buy it. How do we sell it if it goes higher? If it goes higher and we want to sell it, we have to be careful, right? Why? Because of all of that momentum. Momentum is very bullish overall, and that will be a very big spot here. So how do you sell it? You give the buyers two tries, right? You look for exhaustion. We take out this area. The buyers come in. They try once, right? They try twice. We know exactly now where their pain points are. We can sell into stop losses, and I can also grab a new channel off that high, a new channel off that right or off those lows, find that new channel, and I can sell that channel as well, right? This is a very, very common kind of combination, right? Combination setup that we see here. You'll see that buyer failure. Again, we call these two-try failures in our trade room, and then we'll see that market roll over, and then at that point now, what happens? Rotation, right? We now begin that rotation back down to the other side, and that's where you want, again, drill down to a faster time frame and grab that short off the high of that new channel. So got some great trades there. Again, no problems there as we go higher here. The big challenge, much like the S&P, will be staying out of trouble right in the middle. We really don't want to do much in the middle if we can avoid it, right? If we can avoid it. If the market runs lower, It wouldn't totally surprise me if the market runs lower because we have that big move down. Anytime we see a big move like that, we always know there's a big bullseye right at that low. If we do take out that low, keep in mind there's a lot of support down here. I've just simply marked up what I think is most important, but I mean there could be a lot of trend lines down here. So be very careful trying to sell this market right as it pushes inches lower. It really shouldn't surprise us if we really get a shot lower and then bears go once, bears go twice, and right back up again. That's the general idea. The general idea here is waiting for exhaustion from those sellers and then finding that new channel and trading that rotation, right? And again, this pattern I'm talking about, right? Again, the two-try failure. The reason why you want that two-try failure like that is because of all of that momentum. Yeah, we are overall bullish, but long-term trend doesn't matter when it comes to day trading. When it comes to day trading, it's the short-term momentum. I don't care how bullish the long-term trend is. If you're like me and trying to use a relatively small stop loss, right? That's kind of what I like to do. Use a small stop and a big target, get that nice risk-reward ratio. That sounds great, but to be able to trade with a small stop, you got to have good entry timing. One, don't rely on indicators, right? Rely on price action for entry timing. And two, make sure you understand how to use momentum, right? Short-term momentum is, I think, the most important factor in timing entries for short-term traders. I cover a lot of that stuff again in that quick start class. So as we go lower again, right, we take out those lows, let those bears kind of dig their own grave, right? Let them tire the, let them whip themselves into exhaustion there. Let them try a couple times. Their stops are right above that high. I can now again buy off that trend line, buy into stop losses, and then trade that rotation right on a faster time frame, drilling down from there. Two-try failure right into that 1, 2, 3, and that first pullback is always the best pullback. Boy, that would be a great trade right off of those lows here. And again, I wouldn't be afraid here. I wouldn't be surprised if it takes out that weekend gap, right? Takes the weekend gap out. Bears once, bears twice, and back up from there. I wouldn't be surprised about that at all. The weekend gap, of course, is last Friday's close. It would make perfect sense to tap that and then right back up into this trading range. Now, at some point, if we run lower, at some point, I have to bite the bullet and get short, right? What would that look like? Well, it would start off with a pretty strong move down. Then the bears have to hold that pullback and show me they mean it, right? I'm not talking about just a big drop, right? I'm not talking about a big drop, right? If this thing drops hard, then again, it's still 1, 2, right back up again, right? But if this thing, really makes a strong push down, if we hold that pullback now and then jump off the moving average, yeah, see, now that's a breakout. Remember, that's something we haven't seen yet. I know it seems, very, very conservative, right? Like, why do I wait for that proof? Well, because look, right? It's a range, right? If I get in the habit of selling pullbacks right there, that means I'm buying that one. But they fail too often, right? So trying to buy or sell that breakout pullback is just not a reliable trade. So you wait for that. You wait for that 1, 2, 3. Then we know this range magnet's broken. Then we drill it down and we get short, right? Just like the S&P, right? Same thing as the S&P here. I'm not going to take that first pullback, but if it can hold that 1, 2, 3, right, then I can drill down and I could definitely get aggressive off the high of that channel. All right, and at the same time too, don't forget, we may see that 1, 2, 3. We may see that short, right? We'll probably get that short off the high. And then we may take out some of these lows down here. And then by the end of the morning, here we are now, 1, 2, and right back up again. So we may see that breakout, run into some support, and then again, that same kind of two-try failure and snap back up into that range. So we're gonna have some great trades tomorrow morning, this stuff in our trade room. So got a pretty good plan of attack from the Nasdaq. Buy low, sell high. Remember, short-term momentum is all that matters. Forget about the long-term trend. Focus on the short term. How about some gold here? Let's wrap things up here on the gold. What's the most important takeaway right now on the yellow metal? The most important takeaway right now is it's a very strong bull run. That bull run, of course, goes right into a tiny, tiny trading range. And we're basically, right, like any good range, we're pulling back and trying to basically pendulum swing I've measured the amount below to the amount above. We're trying to pendulum swing or slingshot our way, right, running higher here. I really like the buy side here. I've been talking about being bullish on gold all week this week. We talked about the breakout we're looking for today, which definitely we got. So gold is still very bullish right now. One thing I would kind of anticipate tomorrow is, because we had such a big move up today, oftentimes a big move today will result in a small, narrow range tomorrow. So I hope I'm wrong. I really do. I hope I'm wrong, because from what you can see right now is it's pretty much a strong bull market into a trading range. Right? You'll notice how I've drawn up that channel. That makes it pretty easy to anticipate now that pull back, the buyers come in, right? The sellers try to get short. Beautiful example there of a failure setup, right, off the low of that channel, and of course below the low of that range. This is exactly how you want to trade a bullish market into a trading range. And then now, again, they're trying to rip that sucker, right, and run it higher here. Not just back to the highs here. That'll be the obvious target, but a little bit higher there, right? 1836.5 is an easy objective. And really, I've got 42 and 45 are some big targets we have here, right, overhead. So that slingshot going higher, that kind of pendulum swing, right, going higher here is definitely on my radar for tomorrow. So how do we trade this right now? Well, we've talked about this setup a couple times already. If the market rips higher here right now, I would love to grab one of those two-try traps, right? Strong move up, shallow pullback, higher high in price, right? Two-try trap. Honestly, I don't really care where that is, right? If we can get that thing through that high, if they can push to the high, I really don't care if it's the pendulum swing or not, right? If we have all of that momentum slingshotting off of that low like that, that'll be a great entry there to get that trap. We may also see something like a retest of the high, a pullback to the moving average, a jump off the moving average. And what does that mean? That's 1, 2, 3 breakout, right? So mark up that high, mark up that low, drill it on down, baby, right? This, of course, is a 1500 tick chart. We'll drill down to a much faster time frame. We find our price action entry setups, right? Those traps, those failures, those pullback combinations, and if we're lucky, we'll see it jump on some strength up there. And again, if you're tuning in for the first time right now, I go over all the best time frames, how to find the levels of support and resistance, and most importantly, I cover all of the entry setups in a lot more detail, right, in our quick start trading class, right, the little shortcut class. I'll put that in the upper right-hand corner for you if you definitely want to grab that. Now, the interesting part happens when we try to sell this, right? So let's say, for example, here, we know how to buy it as the market runs higher here, right? I get the pop, right? That's my open loop. That high wants to be touched, right? So it wants to be retested. Now, this is a prime example of where we have a strong move. They retest the high. Prime example of where buyers try once, buyers try twice, draw that trend line, make the channel, right? Prime example here where stops are now sitting right below those lows. Where do the bears want to go? They want to go back and take out that low, right? That'll be a nice, easy short off the high. Again, it's a two-try failure. These are situations right here that make for excellent reversals because we've already got that big move up. The buyers want to retest the high. Once they retest their highs, right, the buyers now have what they wanted, right? There's no guarantee we're going to that pendulum swing. It's pretty darn likely, right? But it's not guaranteed. If we sit and stall out at these highs, remember, we're not trying to pick a top, right? We're waiting for exhaustion. One try, two try, short off that trend line, short into those stop losses, right? Target back down to test that high. That'd be a great short trade. Right now, where things become a little more interesting is if we don't retest this high. Let's say, for example, we have that high and we come out and the market runs lower, right? The market runs lower. Now, in this example, now we've got a major failure. Now we have a trend line coming down overhead. That's not what the buyers, right, want to see here. So if the buyers fail, for example, right, if they struggle to get through this range here, right? They run lower here. Can I buy down here? I definitely can, but I'm going to want to see that two-try failure, right? Because of that major failure. bears try once, bears try twice, right? We're buying into stop losses. And then if we do get that deep pullback, we may get lucky and get that nice little pullback off that channel right thereafter, right? So again, it's a 2-try failure entry setup, right, into that 1, 2, 3 reversal. Drill down to a faster time frame and grab the entry off the low of that, right, of that smaller channel there. Where's my target at that point? Target's, again, back up to retest the high. Just make sure, remember, let those bears try twice down there, because that will be seen as a big-time failure. In all reality, we should go to that pendulum swing. Right, we should go to that pendulum swing. Anything besides that pendulum swing right now will be seen, in my eyes, as a failure for these buyers. So even if we do take out that high and come back down again, we may see it take that high out. Buyers once, buyers twice. We get that short, right? Now this becomes a big range, and now once we go lower, right? You can see that little trend line I got coming down there. Right? Like, that would be a great trade. That'd be a great trade, right? Find that, you get that trend line. We go up, short the top, back down to that low. Moving average comes over. Bears try once, bears try twice. All of that momentum now, right? All of that momentum. Let those bears tire themselves out. Their stops are right above that high, and I could buy around the stops. There's no reason why we can't play both sides of that market tomorrow. Remember, because it's gonna be a range. Right, it'll be a big range there, right? So that will be an easy way to sell it and buy it. And hey, if the wheels fall off of it, let's not forget what's below us. We got a big old range down there, right? There's a big old range right there. What's a range? Yeah, a range acts as a magnet, right? So if the wheels fall off of this thing, right? Let's say, for example, we double top. Right? And then bam, big move down. Powell says something. Market freaks out. 1, 2, 3. Right? We get that. Oops, sorry about that. Right? We get that 1, 2, 3. Right? So we take out the highs or not. Right? Or not. Not necessary. We get back below the moving average. Right? The bears go 1, 2, go. Right? Off of that EMA. Yeah, now we know. Mark up that low. Mark up that high. It'll probably be more like this. Right? We take out those lows. Bears come in, they hold the pullback, and they jump, right? That'll be a pretty good sign right there. The bears are holding that pullback. 1, 2, 3 reversal. Mark up that low, mark up that high, drill down again, right? Drill down again, faster time frame. Find that bull trap entry, right? Find that buyer failure entry. Find that pullback combination. I covered those entry setups, right, again, in our quick start trading class in the upper right-hand corner. If the market was to double top and just straight fall apart, right? Just straight fall apart, right? If it falls apart there, if it really rips running lower there, right? Runaway market, look for those traps, right? Find those traps. Traps are always going to be your best bet. Again, if the market was to just collapse, right? Just collapse. Just like today, as the market ripped higher, shallow pullback, higher high, right? Again, these little 2-try traps are everywhere. If the market rips higher at the beginning, if it rips higher tomorrow morning at the beginning, right? You know what to look for. That 2-try trap going lower here, because again, we get that range, right? That range magnet down below. Doesn't seem likely. It seems more likely here we're gonna be at least going sideways, if not higher tomorrow. We, of course, now have a pretty good plan, though, I think, to trade and capitalize on the yellow metal. Again, tomorrow morning, don't forget, 8 o'clock Eastern time. We are right in our trade room. You better come out and see us and trade this stuff with us. If not, we'll come back tomorrow night and we'll do it again tomorrow night. Don't forget, I'll put all of the membership information you guys need. I'll put that right in the description of this YouTube video. So grab that link, get registered, and I'll see you tomorrow morning at the opening bell. Don't be afraid to call the office, right? I'm not that scary, right? Am I? Call the office. I'm always here to answer questions. I can help you get hooked up with the right brokers, the right charts, the right computers, everything you need so you're ready for trading with us in the trade room. Or I can definitely help you get registered as a brand new member. Get a bunch of awesome different bonuses going on right now for new members in the month of July. So keep in touch. If you have any questions, drop those questions for me in the comments section or use the live chat on our website. And we'll see you guys tomorrow, 8 o'clock Eastern time in the trade room as a member. If not, we're going to wrap the week up tomorrow night with the final edition of our nightly newsletter. My name is Joseph. Be well out there. Have a great day tomorrow. And you better come back next time, all right? Adios, amigos. Bye-bye for now.